As regards the commodity currencies, here the situation is next. The Australian dollar is still should be supported from a longer term perspective while trading above its a longer term rising trend line located at 0.76, 0.7605 at the moment. While above this line, the pair should be treated probably a little bit positive from a longer term horizon. But in the very nearest future, from the point of view of coming several sessions, the pair should remain under the pressure, especially in case of intensifying trading relations between the United States and China. There is a kind of small chance that this kind of relations should turn into the real kind of trading war. And that will mean, of course, a negative factor for the future of the Aussie. As regards the New Zealand dollar, we still keep our long trade recommendation, but also here the situation is rather shaky, because any kind of closing below moving average 200 daily line, which lies today at 0.7186, should result in lower levels for the currency. That's why we put a stop loss below 71.90, and we still keep the long trade recommendation, but it's a risky kind of recommendation at the moment, basing mostly on the technical factors and the factors that the trend of the United States dollar in 2018 should be negative. And dollar Canada, here the situation is also very tied to the further kind of protectionist measures conducting by the United States authorities. Any kind of intensifying relations between Canada and the United States regarding future negotiation process of NAFTA agreement should mean, of course, should mean only bad things for the future of Canadian dollar. But anyway, we still keep our short trade recommendation while trading below psychological level 130. Also, you can see there is forming a kind of head and shoulders pattern on the charts, and break below support of 128 could be resulted in lower levels for the currency, probably even a slide to support barrier 126.10 with intermediate support around 127. And finally, some words about the Russian ruble. As you know, the Russia still is in the very tough position right now from a point of view of relations with their Western countries. You know, the diplomatic war and so on. That means that a new kind of wave, the wave of new sanctions against against Russia, of course, should mean that the Russian ruble could come into more selling pressure. Anyway, it's not a news for the Russian ruble. As you know that Russian ruble from a technical point of view still keep it tighter kind of range trading between 55.5 and 61, and while inside of this range the pair should be treated rather neutrally. Anyway, we still suggest to buy a possible retest of 56 barrier, undershooting of 56 with a stop below pivotal support of 55.50, and we still suggest that the pair could retest its next resistance around 58.80. At the moment, that's all. We wish you a nice and profitable day ahead. It was the FutureTrend channel with you, and bye bye for now.